I mean, the story just broke as I sat here with you, so I haven't looked at all the numbers, but it does look a bit generous for an idea which is not that unique or new. I mean, if you remember, I'm older than you maybe, but when I was a kid, there were these machines that you put a little gas canister in it, and it made fizzy water for I mean, so this is the idea.
Get busy with the fizzy.
That's right.
I remember that was the commercial. That's how they sold it to us.
Exactly. So it's not a new idea, but I take a point that it's an environmental play by PepsiCo, and you have to question whether a leaving CEO wanting to leave a legacy pays the right price or pays a higher price to get the legacy, but it's too early to tell.
The anti-plastics campaign, though, has really kicked into high gear. You know, there's all sorts of initiatives trying to remove the amount of plastics used by food and beverage companies, retailers.
That's right.
And if you think about where investors are, they don't want to be involved with heavy polluters either. And there's a real backlash from fund managers about holding those types of stocks. Even if it is a premium, is there sort of rationale that this is a company trying to pitch for the future?
I think that's an absolutely key point, which is as we move, and you think about PepsiCo's products as well. So the cans, okay, are recyclable, the plastics are not, the water is not, and that's the key. So this solves a problem for them with that, but actually that's moving away from what they do as well. I need to look at the deal in slightly more detail, but it looks rich.
The other issue is, how do you get this share price moving again? I mean, if we pop up a one-year chart on PepsiCo and maybe we stretch that into a three-year chart, it's clear that PepsiCo, alongside many of these other fast-moving consumer goods companies, has failed to excite investors. It's just a part of the market universe that has fallen out of favour, it seems to me, as people have chased growth, because they've looked at these businesses with their modest 2 to 3% annual revenue growth, and they've said, well, it's a utility-like business. I'm no longer excited about it.
That's right, and in that context, again, the deal makes sense because it becomes, as you can see, it is a defensive move, in the sense of it's consolidating its position as, okay, a good utility, moving away from a little bit further away from the plastic issue, trying to be more environmentally friendly, but they're not exciting companies in the same way that they were a few years back because the growth is not there and the new product is not there.
I was just looking at, you know, some of the endeavours in recent years trying to get away from that purely soda market and moving towards snack foods. I mean, that's been the CEO's initiative to try and branch out from pure exposure. But again, you know, how many chips, potato chips and tortilla chips can you sell to try and move the market? You get into some EM countries to try and spur growth and get high growth rates. And then what happens? Some of those EM countries have a real challenge taking place. People are risk off on EM. So the overall strategy gets hit. It's no win, right?
That's exactly right. And it remains a major brand, but it remains in the shadow of the other major brand in soda, which is Coca-Cola, which sort of tends to be, particularly in emerging markets, a slightly better recognized name.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.